valuations on Fortinet to conclude to an acceptable buy price range. We're going to start off here on the stock price. So currently trading at $57 a share. Um, Over the course of 1 year, up 10.5%. Year to date, 18.3%. Um, Fortinet just reported earnings, let's see here, August 3rd, and gave us second quarter highlights here of total revenue of 1.3 billion, 26% year over year growth. And then for or their guidance for the third quarter, they have looks like revenue of 1.3 to 1.4-ish range of revenue. So not 26% growth. So honestly, almost potentially a flat growth rate currently, which is probably why the stock is down quite a bit from earnings. We'll come over here. One thing I noticed that I like typically, not always, but when the stock company wants to repurchase its stocks, currently, or what they said is they've purchased their stock between $55 and $58, rounding around, per share, and they still have an available $2 billion available for more future share repurchases. So based on these current levels, they might start using some of that 2 billion to repurchase more of their shares if they've already purchased the shares in the 55 to $58 range. So that might be that's definitely, in my opinion, a positive, because then the company thinks that, you know, in that range that's either undervalued or fairly valued to them. Now if we come over here and come up with a valuation for ourselves, come over here, we'll start with the Peter Lynch valuation. We have FTNT, the ticker entered in. We have a future earnings per share growth rate of 18%. There is no dividend. 24% growth rate, forward growth rate, not just quarter over quarter. So quarter over quarter growth rate's like not much, a couple percent. It's 24% growth rate. Gives us Peter Lynch fair value of $24 a share. Come over here, they'll go at our ticker price, our earnings per share, and this is our today's PEG ratio, 1.8, forward 1.36. So I'll come down here. We are in the fairly valued area, and honestly, probably pushing the undervalued area in the forward PEG. Come over here to our multiples comparison. We have our PAN-W, VMW, and then we have a multiples comparison price of 175. So they're based on comps. This company should be valued around 175, although I just saw a PE on PAN-W is 325. So that is skewing these numbers quite a bit. So we'll bring this one up and then get rid of that. Now that's more acceptable. So $46.80. Whenever there's a PE that's 300, 200, it's not giving you a good data point. Graham's valuation over here, $36 per share. Current yield on corporate AAA corporate bonds, 5%. Gone up quite a bit lately. Market cap, $45 billion. Cash and cash equivalents, $3.4 billion. Debt, $1.67 billion. Cash from operations, annualized, $2.4 billion. It's always nice to see a company that has more cash than just debt, period. I like that. And then that gives us a manual PEG ratio of 0.75 and 18 years for payoff, which is like the multiple, so the PE. So whenever I see it somewhere between that $15 to $20 range, I like it a lot. We have return on invested capital of 132%. Might be skewed somewhere there, but typically I like to see 15 or higher percentage. Anything below 15, I I'm not a big fan of. Come down here, discounted cash flow valuation, FTNT. We're just going to do an 8% Free cash flow growth, 11% on the weighted average credit cost. Current free cash flow on this company is $2.1 billion annualized. Cash, we just saw, is 3.4 billion, debt 1.67 billion, and shares outstanding $796 million for an intrinsic value of $42 per share. We come over here, FTNT is plugged in up here. EPS at 1.33, the lowest growth rate, which is 18% for the EPS. And then we come over here, 18 gets put over to here, 18 goes into 72 4 times. And then how many times does 4 go into 10 years? So it goes into 10 years 2.5 times. So we take 1.3 and double it 2.5 times. So 1.3 we'll round up to 1.5, we'll call that. So one double is 3, the next double is 6, and then we'll just do another double, which is 12, minus, what's half of that, which would be 8, 9. We can call it 9. But since we did round up on the 1.3, we'll call it 8 is the future EPS in 10 years. Future market value is $288 in 10 years. Current today's fair market value is $72 a share. Purchase price of a 30% margin in safety, $50 a share. Now if you come over here, we plug in all these numbers over here, we get an average price of all our valuations that we just did of $44 a share with a purchase price of $31 a share. Now let's go to, so FTFT here, FTNT is Fortinet. On this upward trend here, we'll probably come back, retest this uptrend. Potentially if we break through, this is an area where you're probably gonna want to maybe accumulate some shares. I think right now it's probably fairly valued, especially since the company, based on the valuations we just did anyway, it's saying that fair value price 44 to maybe 50, I mean, depending on what valuation you want to look at, the average of everything. Sometimes these, like this Peter Lynch valuation, kind of really brings everything down, but the average of everything here, you're looking at $50, right? Roughly. So if we can get, in this, right around this range here, if we can pull back into this consolidation, I think is a good time to purchase this company if you're interested. The company is probably already, maybe not already, but soon going to start repurchasing their stock as well in this consolidation range here. So probably somewhere between this $47 to probably $54 range is my assumption. That and I'll be doing the same. I'll be interested in buying it in that range as well. But if let me know if you are interested in purchasing Fortinet and at what price. If there is a company you'd like me to value, put that down below. And thanks for watching, and be back soon with more.